Welcome to TradingLounge and the commodity futures report for Wednesday, November 24. Starting with iron ore, then we're pretty close to having a low in place here, and in fact I think we've got the low in place, but I need a little bit more evidence, and that would be of a little impulse wave to the upside, which we are getting here. This is a daily chart, it's always up here. One of the things that we can look at to help sort of confirm this is that we can see the price here at 591. So obviously the largest number there is 600. And this horizontal line here is kind of interesting, because if this was 1 and 2 here and all of this was the third wave and this was the fourth wave here, then that horizontal line is the 38.2% retracement level. So that's basically where it's closed, and it's at the 600. So we could also say to ourselves, well, if that 600 became the support with a classic trading levels pattern, so we've got the arrival, we'll watch, there may be another little push higher, who knows, we'll see. Anyway, all we're looking for is that first high above the level. And then we can go long from that point. It's pretty much that simple. So let's just wait and see. We're doing a bit of work on the intraday for this as well, as you may know. But yeah, so I just need to clarify that. Even if that is an impulse wave to the upside, then we'll still need the pullback there as well. I won't go to the intraday today, because I did it this morning in the Australian video anyway. So anyway, we're working on that. So there's a possible low in for iron ore, but it's not confirmed. Okay, so a nice tested support on 600 would satisfy that. It's the first high above the level, the retest, and then what we need to see is a move up above that. That helps confirm it. That means it's been tested, and we're out of the door here. We'll lift the building. So that's it for iron ore. Looking good. So iron ore stocks, risk on. Alrighty, so I'm going to have a look at gold next. Where is it? Spot gold. Okay, so I've changed the count a little bit, and I'm going to look at 2 counts. So this is 1 count here. This would also satisfy if I put wave 4 over here for the irregular flat correction. So the A, the B, and the C here for that. That's okay. So it could go here or here. It doesn't. Triangles here, this is here. It's a little bit small for the E wave here, I have to say. So we either look at all of this as wave 1 and back for wave 2 where it is now, and we're going to pull that apart in a fair bit of detail in a moment. We can also see the stochastics pulling down. We can see the other little red dude here hasn't caught up, so there's a lot of fluff to be going on here first, but the fact that it's this low is a good sign. So that's one thing. The other pattern here, which is slightly different, but I kind of like it really too. So in this case, we're still working the triangle pattern, and we've got wave 3 up here with an A, B, C, D, and then the E wave here. So this is, this has been with us for a long time, this particular count here, and it's valid. So that can take us down to the 1750, where there's really good support at that point. So they're the 2 counts. So we're going to go back to the daily count here for a moment, and if this is a and this is all a little bit rough to work out here, but even if this was the triangle pattern, then wave D would be over here, and this would be over here anyway. So this here, that would be 5 waves anyway, because it'd be an A wave, a B wave, and a C wave here for the wave D. So it doesn't matter which way I look at it, I still have to see it as an impulse wave. And I know there's problems with that in terms of the structure in here, because it's very volatile and messy and so on and so on. So we're going to pull this apart in a fair bit of detail now. So on the 4-hour chart, starting, we'll be looking at an A wave, a B wave, and a C wave down here. For wave 2, it's sitting right on the 61.8%. Also sitting on this trend line here as well, which you've probably already noticed. It does look like a third wave to the downside, you know. That's what sort of is the relationship between wave A and wave C is doable, but it's it's way out of whack, you know. So normally I'll just sort of think to myself, well, if it was a triangle pattern, you know, maybe this is finished, maybe it's not here. So I would see like something like this 1, 2, 3, 4, 5 here, then the A, B, C here, and then the other leg coming down to the 1750 area through here somewhere, and then moving up. That would be the that would be the A, the B, and the C at that point. Not a very good C. It'd be the A, B, C at that point to finish that off for wave E of 4. So that's something that we may need to navigate as well. Anyway, we'll put it there. But like I said a long time ago, it doesn't matter which count it's going to be, wave 1 here, wave 2 here, or the triangle pattern, because there's not going to be a big difference between the lows in these. Yes, I know it's a big difference. You know, if you've got money in here, it's a big difference, you know. So, but just technically speaking, it's quite good. So we're just going to have a look at this move in here today, this ABC pattern, to see how that plays out. We're going to drill into that. I don't think the 1 hour chart's got something here. So we've got the A, the B, and the C wave here. And in the C wave, we're looking for 5 waves. It does appear that we can see 1, 2, 3, 4, 5 here and stick that just there, but it doesn't really look like the case. So in 100 ticks, this is 100 ticks. So I think it's still got this to go here for this. So we're not at the 3rd, we need the 4th, we need the 5th wave here to finish this off. If I go to 10 ticks, from 100 to 10 ticks, we can look at it coming down here. So the A wave, the B wave. So this is just for the diehards that want to get the count right. So wave 1 and 2 here, and 1 and 2 and 3 and 4 and 5 for 1 and 2 here, and then we've got 1 and 2 here, and 3, 4, 5 for 1 and 2, and the 3rd wave, 4th wave, 5th wave for the 3rd, the 4th, the 1, the 2, 1, 2, 3, 4, 5 for the 3rd. I'm looking at the 4th, pulling back to the 4th of 1 lesser degree, and then the 5th wave to the downside. So I know that the market hasn't really bounced off the 1800 here, but normally when it goes through and hits group 2 here, 65, 72 and 80, it'll want to go back and stick to it, you know. That's what it'll do, some sort of weird thing here, but still need to see one more move down after that to finish that off. So that's how that plays out. So we'll just keep an eye on it. Yeah, it's not finished yet, but we're more than 2/3 of the way through this, so that's good news. Now, I've put silver in the same sort of boat with the count, so I haven't done a lot of work on it, but from the low here, I'm looking at 1 and 2. There's no overlap here like there is on gold, using the same pattern. So I'm looking at 1 and 2 and 3 and 4 and 5, and an ABC coming back into this space. So the 2300, we'll see a bounce at the 2300. I think there's still more to come down here. It may be done, but I'll have to check on the intraday for that, but I'm not that bothered about it just yet. But we'll start to focus on that tomorrow in tomorrow's video, and so on from that point onwards. We need to be a bit diligent now on this. So that's silver. And crude oil, has finished its correction. So we're starting to see a firming up of commodities. So, daily chart for crude. So from wave 4 here, 1, 2, 3, 4, looking for 5. We're looking for an A and a B and a C here over the days past. Just on the 4-hour chart, I haven't updated this, but it's got the basic pattern here. So from wave 3, the A, the B, we look at 1, 2, 3, 4, 5 here for that. So we're heading in the right direction. Doesn't appear that we've did a little map of 5 waves here. Don't need that. It doesn't really look like 5 waves so far, but maybe I'll just copy this. It's probably 1, 2, 3, 4, but I'll just put this. No, I'll need the other ones. I think I'll need this one. So it's probably wave 1 here and 2 here, or you could go 1 and 2 and 1 and 2. I won't go to the intraday, but the good news is that, I mean, if you wanted to risk it, then a position here and a position above the level here, and then the idea is to scale in between 81, 82, 83 in that space. This will probably play out something like this here. Not quite sure. If that's 1 and 2 and that's 1 and 2, then this will all be 1, 2, 3, 4, 5 for that one. So there might be another one up to here as well. That would be nice to have that first high above the level, and then the ABC correction, and then up like that. So a bit of patience required here, but it does put a good spin on the oil stocks. We probably want to see natural gas kind of play out with all of this as well. But yeah, there it is. An ABC correction for wave 4, and starting to move up. But of course, obviously getting on top of the closest largest number here as support is the is the safety point of all of this. And copper, we'll look at the high grade copper, US copper, so $44,000 a ton. From wave 3 here to wave 4 here, we're looking at a probable triangle pattern. Now, I've made this mistake before. I mean, with a triangle pattern, everything diminishes into the triangle. Everything gets, well, the idea of it is to get smaller and smaller and smaller into something like this, and we're getting that. We've got that kind of thing happening here. Probably sharpen that up a little bit, but it means I'm sort of jamming it all up in here, as you can see. Now I've counted down here, and I've got 5 waves here. Then we were looking for the ABC pattern, and then we're looking for 5 waves down. The 5 waves down was a bit short. Well, it's not short, it's got 5 waves in it, and it's fine the way it is. I was just expecting it to come down a bit deeper, that's all, into here, but it didn't, and now it's rallied back up here. So I've either got down for 1, back for 2, down for 3, 4, 5, yeah, to finish that off, or we've finished wave C with this 3-wave move here, and then we're into D here. So we're looking for an A wave, a B wave, and a C wave for wave D, and then the E wave here. So I've sort of tightened it and shrunk it all up into here, but it might make a fool of me. The worst case scenario for this would be, coming back into the 40,000 sort of area here, or just tipping through it to 39, 38 or something. But there's 2 things I can say about this, is that this is definitely a 3rd wave to the upside. This is definitely a corrective pattern, and it may not be finished until Christmas time or later, to the new year. When it is finished, it will be taking out that top there, and that will put us, the next level above 50. Most people would think 60, but it's actually 65 as a medium level. Will it get that far? I don't know. It could finish anywhere. All it needs to do, sometimes what we can do is take the length of the outside of the triangle here, so to speak, into here. There's lots of ways we could do it. So we may only get up to 55. We may only create the first high above the level. So we could look at this as, if we looked at this in terms of a classic trading levels pattern here, this arrival here, that can be this arrival here, because it got close enough, isn't it? So all of this is the wave 4 here. So all of that there is all of this here. It's just a complicated triangle pattern. And then we need that first high above the level, which normally sits in around, it can do weird stuff, but normally it sits in around the top of group 1. So we've got here 51, 50, close enough, 52, 53, close enough, and then we got 55. So normally it would be, the first high above the level would be in here somewhere. So we may only get to 53, but all I can do, it may go higher, be nice if it did, but all we need to do is just follow the 5 waves up here for all of that. That's all we can do, is just count the waves to get our target, but definitely take that top out. Should end up, at minimum, end up at 53, but could end up at 65, just depending on what the other commodities are doing as well and where they are. So well, that's that. I'm just going to put this back here, and I'll have to close it from here, because when I open it, it will pop open in that space. Rightio. So that's copper. Let's have a look at natural gas. So just in the bigger picture here with natural gas, we've got from the low down here, we've got wave 1 and 2 here, and we're going up for wave 3. So in going up for wave 3, we've got wave 1 and 2, and then 3 here, which is not the 3 I'm looking for, by the way, but 3 and 4 here, and then wave 5 to the upside. So here we go. So wave 5 up here somewhere for this wave 3 at $8 would be perfect. The other interesting thing here is I think that we're finished. It's a little bit messy. If you can imagine for a moment, let's just open this up. We're just looking at, I'm not very good with this particular charting program, I have to say, but we know it's corrective because we've got 3 waves in the first wave. So whatever happens here, it's part of a corrective pattern. So then we could look at this as the A wave, the B wave here, and then 1 and 2, and 3 and 4 would have to go there. I was sort of thinking it would get some other sort of little pattern in there. That may occur yet. We may get a situation where, get my drawing tool, we may get a situation where we do just pop up here, and then we just pop down one more, and then we go up from that point. So that's a little bit of a thing. Anyway, so the other thing here too is that there's 2 things here. The 38.2% retracement level for this here, let's just get that in. So we've looked at it before, but just as a reminder for myself as well. See, the 38.2% retracement level is just above the $5 mark here, the major trading level, and 5 is the second strongest number in the market, and we can see that all of this really is about the number 5, and it's really sticking to it at this point. It's okay for it to come to 50%, but we don't really want to see it coming any lower. On the 15-minute chart, just to, because I think we could be done here. So if we think of, okay, wave B is over here, that wave B there, so we've got wave 1 here and wave 2 here, and then we counted down here as a bit messy in here, but 1 and 2 here, and then 1, 2, 3, 4, 5 for the third wave in here, then the 4th wave, and then the 5th wave here. Didn't really make much of a low below here, but near enough is good enough for us blokes. and then wave 4 here. And I thought that this might be like an A wave here, a B wave here, and a C wave up here. But then I thought to myself, well, that, you know, we've made a new low below here. And when we look at this here, I'm thinking that you might want, if this is important to you, you might want to do double check everything. But I'm thinking that if I can just label this here for a moment. I think that's it. So I think that we've got wave 1 here, wave 2 here, wave 3 here, and then all of this is wave 4. Obviously this is spiked here and overlapped wave 1, but I think we need to be adults and just, you know, accommodate that situation. And then wave 5 coming into here. So I think that that is a good chance for a low here. This move that's moving up here, it looks like wave 1 here, doesn't it? I don't know if that's wave 2 or another wave 1 up there, but if that was 1 and 2, well, it could be, anyway, 3, 4, 5. I mean, this is what I was sort of thinking here. It may pan out or not, but this is a classic trading levels pattern here. The arrival, the reaction, the first high above the level, the A, the B, and the C wave here. So that's the bullish pattern where we need to go long on. So we've got the arrival, the reaction, the first high above the level, the ABC pattern, and we're looking to go long on this because we always go long on the top here. We start here, then we bring it down to here, and then we try to bring it down here further. But we've got this pattern here, which is the most common pattern of all, and that's it. I suppose I should put that on $5. Anyway, close enough. So I'm thinking next time that gets above the 5 and takes that top out, I think that it might be worth a crack at a long trade. Okay, so we've got ourselves an ABC pattern for wave 4. We're at the lower end. You know, this is the 50% retracement level. This is the 40%. So we're in the right place. And the question you need to ask yourself, is the $5 is the closest largest number a tested support yet? And it's not yet, is it? I mean, it's under the level. It's not sitting on there. It hasn't built a position for itself on top of that level. But taking out that little green line would be the first instant in that. Okay, anyway, enough waffling. Gas, nickel. Well, we don't want it on a 15-minute chart just yet. We could come back to that. So with nickel here, I won't go into the big picture, but also we're looking for a classic trading levels pattern here too. So we've got the arrival, the reaction, the first high above the level. So technically we need to be long above there. I was thinking that we need another little move down here, but I'm thinking if crude oil is going to the upside, if iron ore is going to the upside, if these copper is firming up a little bit, so maybe, you know, maybe we can just go straight to the upside. I mean, I was always expecting an ABC rally to here, then down for the C wave down into the box here. Maybe just the trend line will be good enough, and then to the upside, you know. So obviously that's a long way to be long at this point for folks. So strange how the volume does that. The highest bar is on the last day. Why would that be? Anyway, or is it rolling over every month, is it, on a particular day? Has it got monthly contracts? I don't know, I've never traded nickel. So let's just go to the 15-minute chart and try to understand this little move up through here. It looks like it's 1 and 2 in here and 3 there. So based on that, there'll be another little high to go in. It counts as an impulse wave up there. It's a bit long for a wave 2 here, by the way. It would suit a wave B better. This little move here would be one. This is just really guessing a lot, so don't hold me anything in here. But 1 and 2 here. Nice strong third wave coming up. Some sort of fourth. 1, 2, 3, 4, 5. I'd probably would like to finish it here with, what's this here? 3, 4, 5. I think this is a wave 4 here, and we've got one more little move to the upside. We've got little 5 waves to go to the upside. So that's going to take us to 1580 and then turn down. So it's like chewing gum or something. So I think what we'll do is we will wait for one more move to the upside. Let's go back to the daily chart for a moment. Let's just chill for a moment. We don't want to buy into a B wave and get stuck here. That's my main fear. So I'm thinking that that this is 1, 2, 3 here and 4 here. So I think there's one more little move to the 61.8%. And if it was going to go up, then it's going to go up from that point. But otherwise, it will just continue to move down into here and then move up. And then once we got that top in there, then we can bring that down onto that level. And then we can bring it down onto the second level here and that sort of stuff, you know. But at the moment, we don't want to go buying just here if this is going to occur. And there's a good case for this as being an A and a B and a C wave here. The C wave is really strong and powerful, I have to say. More like a third wave. But let's just wait for one more little wave here. Let's let it deal with 1570, 1580. 1580 is going to be it. That's the number. That's the top of group 2. It also fits in nicely there as well. Alrighty, and the US dollar. So with the US dollar, I've got it, as you may know, with wave 3 here, wave 4 here, and a truncated 5th wave here. May or may not be the case, but this is looking pretty damn bullish. It's looking more bullish than a corrective pattern, so we may have to change that again as well. But as it stands, an A wave, an ABC for the B wave, 1 and 2 here and 3 here, and then 4 and then 5 going up. So we've got a way to go yet. This little trend here has just arrived at, this is all of group 2 here, 65, 72 and 80 here. So it's battling with the 65, so that will be 96.50 at that point. So it's going to struggle there, but it is going to push higher. This trend to the upside is not finished and it needs to push up. And this whole wave 3, 4 business I got here, that could end up just all sort of sitting inside of group 2, so to speak, you know. That's what it normally does. It normally sort of sits in there. So we'll probably look at something like that within there. Anyway, further to the upside, if the market moves past this wave 5 of wave C here, then we've got then we need to go back and look at the whole sort of bullish pattern with this. So that means that This is just a monthly chart. So we were looking at this here being down for 1 and coming back for 2 here. That's what we were looking for. But at the same time, this can be an A wave, a B wave, and a C wave here now, and then continue to make new highs up here. So a stronger US dollar. I hope that's the case. I mean, everybody's got their own personal selfish reasons for things. This here is impulsive, so we've got 1 and 2, or 1 to 2 to here, and whichever way you look at it, doesn't matter. We've got 5 waves from here to here. So the question has always been, is this wave 1 here with an A and a B and a C for wave 2 here? But one of the problems is that this here is overlapping this here. So yeah. So this would have to be wave 1 here, and then wave 2, then wave 1, an A and a B and a C for wave 2 here. Because it can't be wave 1 and 2 and wave 3 here, and A, B, C for wave 4, because we're getting overlap of wave 1 and wave 4 and 1 here. So this would be 1 and 2 and 1 and 2. So we might see it. I don't know. I mean, if it takes out the top, if this is correct, and we move up and make new highs here, then we're going to see a really strong US dollar. It's kind of hard to imagine, isn't it, with all the money they're printing? I don't know how that works. I'm not an economist, I'm just a charting analyst. You know, I've got licenses in derivatives and equities and all that sort of stuff, but I mean, really, that means diddly squat. I mean, it means that the government in our country, you know, you need compliance with everything. So, but I don't mind that. I like doing the right thing. But there we go. Just sorry for doodling and dawdling. I just wanted to sometimes I just need time to keep my mouth shut and think for a second. So really, that's the 98 is the 61.8%, but I can assure you when we get to 98, because 8's a profit taking number, it's going to get, you know, it's going to go through the same process as this. But in a nutshell, we need to either see this move up here as 3 waves, or we're going to be looking at it as 5 waves. It'll be something like this. And if we do get 5 waves up, well then we're going up again after that. I mean, it's pretty hard to imagine, isn't it, with the money they're printing? But anyway, let's just see how we go. In the meantime, we're just looking for 3 waves up to 98. And we'll see it at that point. But when it hits 98, anyway, it's going to correct at 98. Well, you can see what it does here. You know, 8 is the 3rd strongest number, and then the 100 here, 1 is the strongest number, and it's just put a ceiling on all of this here, and you know, pushed it back down. So anyway, we'll see how we go. Okay, sorry for the long video. Cheers.